Hello everyone, welcome back to the channel. I'm Trading Co and this is the ultimate advanced price action course, and in this course we'll be talking about support and resistance. What is a support and resistance? How do we find and draw them on our charts, and how do we trade with them? So without a further ado, let's get into the video. So let's begin with what is a support or a resistance. Resistance or support are the price levels on a chart where buying and selling pressure are likely to cause a reversal. Support is a level Support is a level where the price tends to stop falling and may bounce back up due to a concentration of buyers. Here you can see, and this is a support. When price comes to this level, the price will witness a huge concentration of buying and will get rejected from this level, and it will go to upside. And the same goes to resistance, but in opposite way. When price comes to the resistance area, the price will likely witness a huge concentration of sellers or a profit booking, which results the price in falling downside. Now, what a support and resistance. Support is a level where demand is strong enough to overcome supply, causing the price to stop falling and potentially reverse upward, right? Okay, now since we have talked about support, we will talk about resistance now. Resistance is a price level where supply is strong enough to overcome demand, causing the price to stop rising and potentially reverse downward. Here the resistance is a price level where the supply is strong enough to overcome the demand, causing the price to eventually stop rising and reverse downward. This doesn't happen 100% of the time. Sometimes the resistance or support may break because of opposite competition being way too large. Let's say if price is at resistance, sometimes we can expect a reversal, but if the buyers are way too stronger than the sellers, we can expect the price to actually break this resistance, and we can witness the resistance becoming as a support. We will discuss about this topic later. For now, let's look at examples of support and resistance. Here you can see we have spotted a support. So what we do? We draw the wick or the body as a support. Here we will be drawing the wick as our support. Where's the support? Okay, there seems to be an error, but let's fix the. Okay, seems to be an error. Let me refresh this page, reload the tab. Here you can see we have spotted a support. Okay, it seems we have lost the previous example, but we still got an example here. So we will draw the wick or the body as support. Where do we actually draw? We will draw to the candle where the price started to reverse to the opposite side. Here, before the price got reversed, we will be drawing the lowest wick as our support and lowest body as our second support. Here the lowest body is this red candle, so we will draw this as supports. We can draw two supports at just near same area, because sometimes the price tends to reach only one support. Like sometimes the price will only reach to the body, because for that area the price may be seeing too much demand or supply, causing the price to only touch or come near to the body zone rather than the wick zone. And you can see, and I will show you, there are a few examples where the price only reached to the body zone rather than the wick zone. Here you can see that the price got rejected here. Here the price got rejected, and this indicates that the buyers are strong and causing the supply to overcome. And we will be taking this as entry. Where do we take entry? Here we take entry on the risk reversal candle. We will ignore this candle because we need to take confirmation whether the price is actually reversing or is it just a false breakout. And you can see from the second candle we got a confirmation that the price is likely going to be reversed, and we will keep target as this recent high and stop loss with buffer points from the low. Why the buffer points? Now let me tell you why the buffer points are important. Okay, the buffer points are important because when price trying to get rejected from the previous support or resistance, the big institutions or the smart money will make sure that the price will hit the previous retailers stop losses, which will result in adding more liquidity. So let's, for example, here you can see this is our supports. So what the institutions does is that they will drag the price even lower, making the retailer stop losses get hit, and from there the price will again reverse to upside. The most biggest mistake that retailers do is that they will keep the stop losses to either week low or week high. It is dangerous because most of the time the big institutions will actually hit those zones to make sure they will actually stop out most of the retailers, which will result in them grabbing even more liquidity and pushing the price even higher. And you can see, and I will show you even more examples now on how does it actually happen or how we can actually avoid it. Here you can see the price didn't actually went below, but still it got reversed. So our target got hit here. Now let's look at a resistance zone. Okay, here we have found resistance right here. Sorry. Okay, here the price came to this wick level and got heavily rejected. This indicates that the sellers are actually stronger than the buyers. So we will take entry at the second candle or the third candle opening. Oh, sorry, this is buy entry. Okay, we will take entry at the third or the second candle closing. And since the price actually didn't hit our target here, as you can see, it did hit our stop loss, but most of the time I suggest you to keep a trailing stop loss instead of just basic stop loss and target, because it is better to trial your profits rather than losing them all in one go. Here you can see the price actually given us points, but if we left the trade with this target and stop loss, the price actually hit your stop loss and again given a move to downside, which results in making you think that you are right, but the market still hit your stop loss, which will result in making you go aggressive into selling and buying. That's why it is important to trial your stop losses rather than just keeping plain targets and stop losses. Here our stop loss will be this buffer points. Here you can actually see that the price actually went way more above the resistance, but this is a small momentum rather than big. We will look at big movements eventually, but for now, if we have tried our stop losses, we have gotten target of 0.078, which is $16,000 according to US currency. Because we are in forex now, that's why we are looking at dollars instead of rupees. Now let's actually look at another example. Okay, here we have spotted a resistance, so we will draw this level as resistance from the highest body. Wait, let me draw the highest body first. Okay, this is the highest body. Now we will draw this as resistance and the wick, highest wick, as second resistance. And you can see here that the price came to this level and got rejected and even given a signal of indecision and a sell movement. So what we do in this situation, we will take entry right after the rejection candle. Here this is the confirmation and this is another confirmation of continuation of the trend, and this will be our ideal entry point with stop loss nearly at buffer points and target at this swing low, and the price actually got our target hit. And as I told you before, the when you have taken entry here and kept your stop loss at this wick high, the price actually hit your stop loss and went in the same direction you traded in. This is why it is important to keep your target with buffer points, no, sorry, the stop loss with buffer points rather than just keeping it at wick highs or lows. Now let's look at one last example and then we'll go to multi-time frame support and drawing resistance, and then we will discuss about how to actually draw and trade with them. And here okay, here we got, it is still kind of a resistance but it is more like a supply. Now it seems we haven't, okay, here we got a support, here we got a support, and we draw this wick low as support, and you can see here the price got rejected, but before rejecting it given a very volatile move, confusing the traders and actually confusing the retailers. You can see here the price got rejected hugely, but then again hit the stop loss, but it didn't hit the stop loss. Here you can see that the price actually didn't came to this low wick and didn't even came near to the wick. So yeah, here the price actually didn't came to the wick, lower wick of the position, and you can see here price got rejected again, showing momentum to the upside. Here you can see, as I told you in the previous video on how to read candlesticks, you can actually see here the sellers tried, but the buyers rejected and pushed the price higher. The sellers tried to jump in again, but again got defeated in battle of taking the price to up or down. Here the finally the buyers won the war and have taken the price to upside. As I told you, when price gives you this long wick momentum, it means that it is not sellers that are winning, it is the buyers that are winning. Here you can see when price opened at this high and went to this low, but buyers rejected that low and dragged the price to high again and making the candle close near to its open, making sure that the price will eventually reverse. But the sellers tried to jump in again, but this time instead of a strong candle, we got a huge wick to downside, indicating that the buyers are still trying to take over the market. And right after that, we can see that the candle given a green body, which indicates that the sellers lost the battle and buyers won the battle, and it is likely going to reverse to the upside. So you can see right after that the price actually got reversed to the upside, and this is how you can actually trade with confluence by reading the candlesticks and drawing support and resistance in the correct way. Now let's talk about how to actually draw support and resistance in multiple time frames. Okay, we are in 2 hour time frame, and let me tell you this before jumping in to the topic. Always remember to draw your support and resistance in higher time frames first, and then draw your minor support and resistance in lower time frame, because the higher time frames have more concentration rather than lower time frames. It is likely going to be that the higher time frame levels are going to be work better than the lower time frames, and the lower time frames will only work for few, like 2 or 3 times, or it may not work for twice again. And so here you can see that we have spotted a support. Now let's draw this as our support, and we will go to lower time frame. After drawing the support, we will draw this and this body. Where is the body? This is the body. We'll draw body 2 and go to 30-minute time frame. Which is it? It is 10. Okay, we have lost. Is it this? Okay, it is this. Is it? Okay, this is the area. Okay, here you can see that the price came to this level and got rejected to upside. What if we have taken trade thinking that this as a resistance and drawing this as a resistance? What going to be happen likely is that you might, if you have taken, okay, let me make this clear. So let's say here you haven't spotted the support in the longer time frame, but you have spotted a resistance in lower time frame, and thinking that the price will likely going to fall, here you take entry by looking at this red candle, thinking that it is the start or the beginning of the market fall. Let's take example entry here, and and after, right after that, you will be ending up with a loss of 250, and you'll be wondering, since this is the resistance, why didn't it work? Because here you can see in the longer time frame there is a support here, and the price will likely going to react to the longer time frame levels rather than the short time frame levels. And you can see here that the resistance didn't even reacted, it kind of reacted but still didn't worked out. And what worked out is this support got reversed and broke the target and made the broke the resistance and made that resistance into support. And you can see the price actually ended up going huge. This is why it is important to mark the longer time frame resist levels and then draw lower time frame levels. Now let me show you another example just like this. That's me. Okay, we have found a resistance on the higher time frame. So let's draw the resistance and go to lower time frame and draw lower time frame levels. Here these two are resistance 1, resistance 2. Now go to lower time frame and let's check on these levels. Here you can see those who have taken entry thinking this as support are likely that they have lost plenty of opportunities. Here you can see you might think that this is a support since the price got rejected twice, making you think that this is a working support. So let's draw this as support, and let's draw it even further, drag it even further. Okay, this is our support of lower time frame, and let's say you haven't noticed the longer time frame resistance. So what's likely going to happen is that you have taken entry here. Okay, you might not have taken entry here because the price actually broke it in one go, but there are few traders who think that the price will reverse by making a false breakout. So it is important to listen either way, because there are actually few traders who will take entry even though that is a breakout candle. They might think that it is likely going to create a false breakout, but no, it's not going to be a false breakout, but rather an actual breakout. Here let's say you have accident, or not accident, let's say you don't know and you have taken entry thinking that the price, okay, this actually shall not buy. Okay, here you have taken entry thinking that the price will react after few time or after some time, but it ended up actually hitting your target. And that's why it's important to draw long longer time frame levels first and then go to lower time frame and draw the minor levels. You can see here the price came to this level and got rejected again. So what we do actually, we will take entry here. Here we saw a momentum, upward momentum, then we see indecisiveness, and then we see a reversal. So we take entry here with stop loss above the buffering points and target as this support. You can actually use minor levels as your target levels or stop loss levels. it is better to use minor support and resistance, more of a target and stop loss levels rather than depending on them. Yeah, it is better to use them as support and resistance. And let's go to another example. Let's go to higher time frame. This time we'll change the GBP. Okay, let's go to GBP USD. Ground British ground British dollar. Okay, sorry, it is ground British pound versus US dollar. British pound versus US dollar. So let's find levels on higher time frame. Okay. Okay, this is okay, we have how to find a support here, and let's go to lower time frame. This is 4 hour time frame, so let's go to 15 minutes time frame and we will see what likely happened. Okay, where did the support go? Okay, here you can see the price actually given a false breakout in the lower time frame, and it kind of given a buying opportunity here. You can see that the price came to retest this level on the lower time frame and given a signal to upside. So what we do, we will keep this low with buffer points as our stop loss and target at this swing high, because here you can see that the buyers tried to gain control of the market but inevitably failed. So we will mark this as our target, and you can see that the price actually hit our target. Let's say you have out to have taken this as resistance because the price actually got rejected here. So let's say some of you, or even I did that, so let's admit the truth, and let's say we have drawn this as resistance and hoped that the price will reverse from this, not knowing that there is a big support down here. So what we do, we take entry by looking at this candle thinking that the price actually given a false breakout, but inevitably the price actually hit the target, sorry, stop loss instead. This is why it is important to mark the higher time frame levels first and keep the lower time frame targets as our target. Now let's go to the topic where we actually implement these techniques and trade with profitability. Okay, now let's talk about how do we draw support and resistance and how do we trade with them in multi time frame. So now let's go to our higher time frame. As you can see, we are in 4 hour time frame, and now let's go to BTC USDT, which is Bitcoin Tether US. So we'll go to Bitcoin Tether US and download the old. And now here you can see the price got rejected here and again came to this level and got rejected. So we'll draw this rejection as our resistance and go to lower time frame of 30 minutes. And here you can see that the price rejected here and came back to this level. So what we do, we take entry here and the price got rejected here. This is our entry zone, but if you notice closely you can see that the price got rejected here. So some people might draw this as a support, so let's draw this as our support. Okay, let's draw this, and you can see these have now become a support. So many have taken entry here when price came again inside the support and thought it was a false breakout. So who have taken entry here, they must need to make sure if there is a older support or resistance, or a resistance in higher time frame. Here we got a higher time frame resistance in a lower time frame. So those who have taken entry thinking it is a false breakout, they have lost the trade. And for those who have taken entry of the sell side here with stop loss above this wick plus buffer, and they can keep this as target zone 1 is to, okay, it is 2 is to 5.9. So we are risking 0.59 and taking 2, which actually good for us. And you can see the price actually have inevitably fallen to downside up to this support area, this support I'm talking about, and you can see that the price have eventually fallen. Now let's go to stocks like Tesla or HDFC Bank, or the, there is a stock called, okay, now let's just go to Nvidia. For suppose okay, that's NVDA. Okay, Nvidia. Let's go to 2 hour time frame. Since this is a stock and this does not trade like 24 by 7 unlike forex or bitcoin, so we will go to maybe 1 hour time frame. That's fine, and we will draw. Okay, here you can see we have spotted a resistance, this body and this high as a resistance, and we got here a major. Okay, this does not look like a support. If you look closely, there is not a big momentum from this point of the zone. When you need to draw a support or resistance, you need to make sure that price got rejected with momentum. Here you can see, here you can see this is as a support and got rejected. So we can draw this as support, but here we can't draw this zone as support because it only given a few points rather than a huge move. And that's how we actually draw support and resistance and valid if they are strong or weak. Okay, here we have drawn resistance, and let's go to lower time frame of 15 minutes and let's see how we got the trade, or if we have gotten any minor supports in that lower time frame. Okay, here the price, this is our first resistance, so based on this resistance we have came to this, and you can see the price given a fake breakout here with the indecision candle on the reversal of confirmation, and the confirmation candle signaling that the price is about to reverse. So we take entry here with stop loss of above the previous week high and stop target as maybe this support or resistance, or okay, we can keep this as this area as target area, and you can see that the price did inevitably fall and down hugely. Now let's go to stock of maybe HDFC Bank. HDFC Bank. Now let's go to higher time frame. Here you can see this is 2 hour time frame, and then we draw a support right here and the body support right here. Now let's go to lower time frame of 5 minutes now, because it will be way more better to explain what might happen in the lower time frames. Okay, here you can see this is our area of support, and the price came to retest this level, and you can see that the price touched the wick low or the wick support and got reversed. Here there is no confirmation of taking a trade, so what we do, we go to lower time frame when the price is rising too quickly in lower time frame. So what we do, if the price moves very quickly in 15 minutes, we will go to 5 minutes. If the same thing happens in 5 minutes, we will go to 3 minutes. So actually we can take trade in lower time frame. And let's see, when did we got the entry? And okay, here, okay, the plan exceeded, but here you can see we have got an entry here. So what we do, we keep entry, okay, ignore that first for a second, and stop loss below this, and target at inevitably previous support, previous resistance or swing levels. Now let's go to back to 15 minutes, and you can see this is the previous high, so we will keep this as our first target. And did the price hit the target? Of course it did. And let's see if the price actually hit the second target too. Here we will take the same trade with, oh, this, we will take the same trade with second target, and price did actually hit the target. Here you can see the price did, and for the target the price again did hit our target. And this is how you actually trade with support and resistance. You need to always need to make sure to draw the higher time frame resistance or supports, then go to lower time frame and draw support and resistance, and may confluence them to your trading strategy and improve your taking trade strategy by confluencing both of them. Like, let's say, let's draw an example here. Let's go to the blank canvas, and let's say here this is our major support in the higher time frame. And what the price did is that price came to this level and tried to reject, but tried to break above, but it didn't went above. Instead it fallen very drastically. But what's the main thing? You might get confused here, but let me get this right again. So this is our major support, and this area will be our major minor support in lower time frame. Let's say this resistance is in 2 hour time frame and this support is in 5 minute time frame, and let's say that the price got rejected from here. So what we do, we do nothing. We will wait for the price to break this support as a confirmation of this resistance doing its job. And when the price broke the minor support, we need to make sure to take entry here with buffer points above resistance and target at swing points or at minor supports. And that's how we get confluence for our trading system. And that's how we actually trade support and resistance, and that's how we draw them, and that's how we spot support and resistance. So for more content like this, make sure to like and subscribe, and don't forget to watch our previous video which is about how to read candlesticks. It will help you way more better than any other videos you find online or in YouTube. And I also suggest you to watch our previous classes or videos about price action strategies, which is more of a indication that you can actually learn from them, and you can actually know what we are using to use them as confluence, and how we increase our winning ratio by confluence trading. And that's all for this videos, guys. Don't forget to like and subscribe. As I told you, only 20% of people are subscribing. So if you subscribe, that's the best help you can give. And if you subscribe, you'll be gaining even more knowledge from us. And you can also check out our app called Trading Co. Don't forget to check our app. Don't forget to like and subscribe, and I will see you in the next video. What is the next video about? The next video is about none other than supply and demand. This will be a way more long video than our previous two videos. So don't forget to check the subscribe, and don't forget to get notified about the supply and demand video. Thank you for watching.